While browsing through the WallStreetBets subreddit, I came across a very interesting stock market theory, called markets crash every time Oreo releases an even greater stuffed cookie. Surely this couldn't be true, right? The hypothesis being that the increasingly depraved debuts of Oreos with more stuffing indicate unstable amounts of greed and leverage in the system, serving as an immediate indicator of that the makings of a market crash are in place. Conversely, when the Oreo team reduces the amount of icing in the treats, markets tend to have great bull runs until once again society demands to push the boundaries of how much stuffing is possible. Or in short, Oreos with less stuffing mean a bull run and Oreos with more stuffing mean a crash. We even have some of the examples. In 1974, double stuffed Oreo, which has about twice the normal amount of cream filling, got released, and as a result Dow Jones crashes 45%. In 1987, big stuffed Oreo, which was several times the size of a normal Oreo, got released, and as a consequence we got Black Monday, a 20% single day crash and a following bear market. In 1991, mini Oreo is introduced. Smaller icing ratios coincide with the 1991 Japanese asset price bubble, confirming the correlation works both ways, and the reduction of Oreo icing may be a potential solution to preventing a future crash. In 2011, triple double Oreo is introduced, which combines 3 wafers with 2 layers of cream, 1 vanilla and 1 chocolate, and the S&P drops by 21% in a 5-month bear market. And this crash is especially interesting because more specifically triple double Oreo was introduced in the summer of 2011, and the short-lived bear market lasted from May the 2nd to October the 4th of 2011, so essentially throughout the whole summer. Now we've came to the release of Mega Stuffed Oreo in February 2013, which wasn't mentioned in the initial research. Mega Stuffed Oreo is similar to Double Stuffed Oreo, but with even more cream filling, and I guess it wasn't mentioned because the stock market didn't really crash in 2013. In fact, it went up around 30%, so that's the first outlier in this theory. In 2015, Oreo Thins were introduced, and a complete lack of icing causes an unprecedented bull run in the S&P for years. In 2019, the most stuffed Oreo got briefly introduced, which has approximately 4 times the filling of a standard Oreo, but was pulled off the shelf before any major market damage could occur. And here the author says that the most stuffed Oreos got reintroduced in 2021. However, I could only find that they were quietly brought back in the fall of 2020. If they were reintroduced in the beginning of 2020, we could say that they predicted the COVID crash. Unfortunately though, they were brought back in the fall and the markets continued going up, so this thorough research has another outlier. And in January of 2022, Oreo Thins Extra Stuff got released, which are basically Oreo Thins with comparably more cream filling than the original Oreo. More stuffing once again means a market crash is about to happen, and surprisingly, after the S&P peaked on January the 3rd, the exact month when these cookies got released, the market dropped by more than 20% in the coming months. And it just so happens that in January of 2023, the most Oreos got introduced, which are basically the same cookies as the most stuffed Oreos, with the only difference being that the cream filling contains chocolate cookies. So they didn't actually introduce Oreos with more filling than before, and besides that, it's a limited edition, so these cookies aren't here to stay and shouldn't have much of an impact on the stock market. But if we still count them in, we should expect the stock market to crash. Year to date, the market is up around 10%, however it's still the beginning of the year, so I would give it a couple of months before we say this extremely thorough and well done research is not accurate. Otherwise, when looking at the Fear and Greed Index, we can see that in January it was rising consistently, and in the beginning of February it even went into extreme greed territory for a couple of days. So in this case, we could even say that an Oreo with more stuffing indicates greed in the market, just like it's written in this theory. Oreo is owned by Mondelez International, which is publicly traded and has a stock ticker MDLZ. I checked if the company's stock also reacts according to the theory, and I couldn't really spot any major drops, except for the 27% decline in the beginning of 2020. But as I've said, this drop doesn't coincide with the release of an Oreo with more stuffing. Having all that said, there are a lot of limited edition Oreos with different flavors, but it doesn't look like they had much of an impact on the stock market. And I think it's an interesting coincidence that the releases of Oreos with more stuffing coincide so perfectly with stock market crashes, except for the 2 outliers: the Mega Stuffed Oreo release in 2013, which didn't cause a crash, and the most stuffed Oreo introduction in 2020, which was released a couple of months after the crash. I personally won't short the market the second Oreo releases an even greater stuffed cookie, but with 6 out of 8 predictions being correct, this theory is still more accurate than most finance YouTubers, at least judging by their titles and thumbnails. And if you want to see more of my content, you should definitely check out the video that just popped up. up. And if that is not enough, smash the subscribe button as you'll help me out a lot in reaching my goal of 600 subscribers. If you have any questions or recommendations, leave them in the comments down below, and thanks for watching.